Okay, welcome everyone to the 4-hour model part 2. So I've just done the OB module, so if you haven't watched that yet, make sure you go and check it out because it's pretty important as we move on to this next stage. So essentially what I've done is I've already done a part 1 to the 4-hour model, obviously, and that was all about the probabilities of running for 4-hour highs, running for 4-hour lows, okay? And what I've done is, obviously I've listened to some of the feedback, seen how you guys are treating it. A few of you are still struggling with it, so what I've personally done is developed it even further, and I've introduced the Spitfire entry model into the bias and into the analysis, okay? So the model is, if Spitfire entry model forms from previous hourly high or low, trade to align bias for 4-hour high or low, okay? For bonus, it's pro midnight or pro opening prices. That just essentially means you're trading toward opening price, not away, okay? You'll see what I mean in more of the examples, okay? Other bonuses are draws on liquidity, such as the 1 hour naked gaps and above. Ideally, my favorite is the 4 hours, or wickless candles 1 hour and above. Again, ideally 4 hours are my favorite. So from the pilot feedback, yeah, I understand the idea and the probabilities, but I struggle on finding the direction, okay? And that's fair enough. You know, we can't all have, you know, we can't all have as much experience with the price action markers as some of the other guys who trade NQ regularly. But yeah, this is essentially what we're looking for here. 1 sec, so don't want my earphones to die. Okay, so this is going to be our signatures in price, okay? So this is typically what we're going to look for. This is like the ideal situation, all right? So we've got a previous 4-hour high, previous 4-hour low, okay? We get our 6 a.m. open. We run an hourly high, and then we form an OB, okay? We get that order block formation, like we just talked about. We get that Spitfire entry model, all right? So we're looking for at least a 1 hour high to be taken, and then that's gonna help form our bias to trade down to that 4-hour low, okay? So if a 1 hour high is taken and we get an entry model, we're looking for the previous 4-hour low. If a 1 hour low is taken and we get our entry model, we're targeting the previous 4-hour high. Okay, so we're looking to get into these positions where we have an alignment with this model, okay? So ideal situation here obviously is we're pro opening prices, okay? So you can see 6 a.m. opens up here, runs the previous 1 hour high, we form an order block, we get a nice back test, we're above 6 a.m. open, we're above midnight, everything is lovely, and we run down for 4-hour lows, okay? Time frame alignment, 1 hour highs and lows. The ideal here is really like a 5 minute, because that's technically the alignment of 1 hour and 5 minute. But like I said, with the Spitfire entry model, use the 1, the 3, and the 5. Just whatever you can find that makes the clearest sense to you, okay? So, you know, there's going to be other examples as well. I would be totally okay with this. I personally haven't seen it, but if you use a S&T instead of a 1 hour sweep, I think that's totally valid as well. Okay, so in this example, you can see we get an S&T instead of taking that 1 hour high, and then we get a nice inversion, and we also lose that 6 a.m. open. We back test it. You know, we're disrespected 6 a.m. open in this example, and we're above midnight. So then what's that going to do? We're going to look for that to trade down to the 4-hour low. Okay. Another example here, that's the same one, isn't it? Oh, sorry, yeah. So here's another example for where when you've got opening prices for confluence, okay? So for instance, if you opened up there, you immediately take a 1 hour high, you lose 6 a.m. and then you can look for that back test of 6 a.m. with your OB. So sometimes you're gonna see like opening price confluence, and you'll see some actual examples of that in a sec. And then you've got other examples like this where you don't necessarily need the 1 hour high or low sweep to happen after 6 a.m. It can be prior, okay? So we've got a 1 hour sweep prior to the 6 a.m. open, okay? So that's already informing us prior to the open that potentially we are going to look for those highs. And again, you'll see examples of this. So the 1 hour sweep occurred, we formed a breaker block, we opened at 6 a.m. and we started to run for the highs, okay? So it's just pre-warning us potentially of that bias. So what this is going to do is, the 4-hour model was, you know, fair enough. It was a little bit difficult to determine where you were going to go just purely based upon the opening reaction, because sometimes you'll move away from the open and you can look to long towards it or short towards it. But what this is doing is it's just giving you that ironclad mechanical rule set of you're looking for the 1 hour sweeps. Okay, so they're the signatures we're looking for, and here was the back testing I did. I only managed to get 27 trades out of it, unfortunately. I was quite busy, and I did want more, but I ran out of my trial as well. But you can see here I was trading with 1% of the current balance. So I was trading, so when I was up to 120k account balance, I was risking 1.2k. Okay, so I was only ever trading risking 1% of the account balance, and you can see here 60% win rate. The average R is about 2.4. Yeah, looked really good. The ones where I could have hit profit, potentially break evens, there's 4 there. I generally went didn't really use break even. I was generally at a set and forget sort of mentality with this, but you can see here the winners and losers. Typically a winner is going to be around an hour and a half. The max win was about 5%. Max consecutive, about 4 trades in a row. Total losers was about 11, and worst loss, again, just 1%. That's all you're risking, and the average duration is about 40 minutes. So you pretty much, if you're going to lose, it's going to be pretty much within the first hour. And then max consecutive losses was only 2, which was quite nice. And then you can see here, May and June, there's obviously quite a few gaps. So the reason for the gaps is you're not going to get a trade every single day with this, because a lot of the time you're going to get like a bullish candle into 6 a.m. and then 6 a.m. is going to open it, and immediately it's just going to go and take the high. You know what I mean? Like, really, really bullish, impulsive market, 6 a.m. opens, and then you just immediately run the high. And there's just nothing for you to do. You know what I mean? Because we're trading to the previous 4-hour highs and lows, and if you immediately take it in the first couple of minutes, there's just, sorry, nothing you can do, bro. Okay, so you will get this document like usual. Here you can literally see all of the journals trades I took in the back testing. I'm not going to go through them all, but I have plucked out a few nice examples. They're literally all the trades I took with some explanations, some commentary. You can see in some cases I did flip my bias. Yeah, I'd encourage you to look through them and maybe have a little note yourself, maybe question. So one of the big lessons from the session definitely was the 1 hour sweep should always be monitored for OBs and BBs formations, even prior to 6 a.m. open. Okay, so that was probably the biggest revelation of the backtesting session, and that's why those sessions are so good, because they provide you insights that you wouldn't have thought of otherwise. Okay, so we're just looking for those formations from 1 hour sweeps, and we're using the 5 minute, the 3 minute, and the 1 minute for refining those levels. Okay, so here's an example when so I mentioned previously where you've got like opening price as a confluence. So in this example, you can see this was a really good one. You get that 1 hour sweep right there. See, you get this 1 hour sweep. You can see these are 1 hour high time frame candle. This is a 3 minute chart. So you can see we get that 1 hour sweep there. We form a breaker block. Okay, so this is a down close candle. We sweep liquidity, close above it. It then fails here, becomes a breaker block. Okay, and then you can see we come back up into it. We open 6 a.m. and I'm already shorting this at 6 a.m. I go into that with my stop above the high, and this blue box here that you can see, this is just marking out the previous 4 hour candle. Okay, so this was the previous 4 hour low, and this was the previous 4 hour high. So this blue box is your previous 4 hour range. Okay, so here you see the 3 minute entry. You've had the prior 1 hour sweep. You get the breaker block, enter short. Your target is the 4 hour low because you've had the 1 hour sweep, you got the 4 hour low. Little bonus here, you can see there's a bit of a SMT going on there. And yeah, really, really good on that. And my mouse has just died, so 1 second. Everything's dying on me. Right. So, BB formation at hourly high, 6 a.m. opening, lining up for a rejection, pro midnight as well. Yeah, so you can see this blue line, that is your midnight level, and the yellow line, that is your 6 a.m. open. Okay, so we're pro midnight, which is beautiful. Next, we have a 1 hour sweep with a 3 minute order block formation, entry prior to the open again. 6 a.m. was the catalyst. You saw that today. 6 a.m. was the catalyst. So we're above midnight. It's yellow this time. I changed the color over the course of a few days. But you can see this is your previous 4 hour range. Okay, we've opened up at the highs. We've had that 1 hour sweep. So you can see that in the 1 hour candles. We've already swept the 1 hour high. right? Once we get that 3-minute order block formed, so we got 1, 2, I'm sorry this isn't very clear, it's a bit pixelated, but you can see there's 1, 2, 3 bullish candles into sweeping the liquidity. We close below those bullish candles, and that creates an order block, okay? That is on the 3-minute chart, and then I simply just short at that breaker block, at that order block, stop above the 1 hour sweep of the high, immediate push, okay? Really, really nice. The R on this was like, that was the 5% winner. Really, really nice. So what else have we got? So here's one of a premium long, which offers a scalp, okay? This is a really, really good example because what you've got here is obviously you're long and very high up in the premium, okay? But the 1 hour sweep is into internal liquidity. So you can see this on these candles. We're sweeping in a little low there. So the previous 1 hour low has been swept and we've landed inside this internal 1 hour, okay? So you can see very nice bullish price action. We're obviously long and very premium, but a really, really good point to be made here is you should really only use this in conjunction with high time frame discounts, okay? So if you look at the 4 hour, where are we on the 4 hour? Super, super low down, okay? So we're taking a low time frame premium entry, but we're just following the price action, okay? But we're super low down, okay? So if you are going to take premium longs like this on a low time frame, ideally you want to do it in conjunction with like a high time frame discount, okay? So how to trade: 50% TP at the highs and trail your stops. So that's exactly how you should be trading it. I took full TP there because I'm only back testing, but if you are going to trade something like this, you know, you want to be just obviously the risk to reward isn't that great. This is like a 1 hour trade, so if you do take those highs, you just want to get a quick TP out of there and trail your stops, okay? See what you can do, see what you can catch, okay? Always be aware of the 15-minute swing structure. This is a really important thing as well. So if you are looking for discounts, premium, you're not sure where to put it, just simply look for market structure shifts and look on the 15-minute time frame, okay? My favorite time frames for market structure are the 4 hour and the 15-minute because they're my intraday levels, okay? So really, really easy. Here's a cool example of where set and forget wins. So set and forget again, entry prior to 6 a.m, looking for that expansion on the turn. 1 hour lows swept prior, nice 5-minute order block formation from the last down close candle. So you can see here with order blocks, you don't necessarily have to just use like the series. You can use just where is the last bearish candle and have we closed above it. So in this example, you can see I've got a 5-minute down close candle. We've swept the previous 1 hour low, okay? So you can see it was swept the previous 1 hour low. We closed above and I've entered limit because it's a 5-minute, so I can enter at limit. I don't have to be so aggressive. And I've put my stop at the low and I've got a target for the 4 hour high, okay? And in this example, you actually front run the midnight level. Oh, we're pro midnight as well. Good point to make. We're pro midnight. You can see we do front run it, come back down, tap into that order block again, okay? And then we go. More than likely, if I was trading this personally, I probably would have been stopped trailing in profits, but you can see just how great that is from a set and forget perspective. And yeah, really, really nice. So this is the final section. This is recent price action. Today's date is the Valentine's Day, 14th of Feb. So this was Monday, and this is recent PA from the perspective of order blocks, breaker blocks, etc. So this was Monday. Really, really tricky day because we just sort of just hung on to those opening prices, and we were super bullish on the day. But this is a really nice one, okay? So this, look, you've got 9 a.m. open, 9 a.m. UTC, 4 a.m. New York. We immediately open and we run the previous 1 hour low, okay? You can see that immediately. Run the previous 4 hour low. No, we don't, because that's the previous hourly low. My mistake, sorry. But we do run this liquidity here and we bounce really aggressively out at midnight. So once we get that strong bounce with this bearish volume candle, okay, we close above. That is now an order block because it's the last bearish candle that swept liquidity. That was my mistake. I thought this was the 1 hour low, and that was just inside 3 a.m. there. And then you get that really nice bounce out of there. You get that really nice bounce out of there again. Okay, this example, this was a really, really good one, and I did actually long this. So you've got a 1 hour low swept. So this was your previous 1 hour low for sure. It was definitely the 1 hour low because that was the 5 a.m. hourly candle. You swept that low right there. And this is something called a propulsion block. I'm not going to go into this too much, but essentially all it is an OB formation that's come off another OB. So it's a OB bounce off an OB, and that's known as a propulsion block. But in this example, you can see that you get that final down close candle. You don't necessarily have to use the full series in some cases, but you can see this was the bearish candle that swept that 1 hour low. And you see once you get that formation, that close above, price just aggressively pushes from there. So you can see once you get that close above, that engulfing candle, and this is on a 1 minute, you could have literally just marketed in. Okay, so that's that. Oh, sorry, one thing to mention. So you've got the 1 hour low swept, you've got the order block formed, okay, and you've got a previous 4 hour high, okay. So this was 6 a.m. 6 a.m. drove down into a 1 hour low sweep, okay. It bounced off of this order block, it created a propulsion block, and then it ran for the previous 4 hour high, okay. Another cool example on this chart is if you look at the 5 minute, you also had this like bullish candle. You come down, you close below, you sweep some liquidity, okay. Obviously you did sweep the 1 hour low as well, as we just discussed, and then you get that close above. This forms a breaker block, and you can see how you can use these kinds of breaker blocks for trend continuation, okay. So really nice for trend continuation, that one. So I've only got examples from Monday and Tuesday. I may add some more later, but these are two of my favorites anyway. This is probably my favorite trade of the week, to be honest. This is probably my best. So this one's really nice. The only thing I don't like about it is we are shorting counter midnight. And although we have previously rejected it, we are still above 6 a.m. Okay, so you get your 6 a.m. open down here, right? You then go and sweep the 1 hour high. Okay, so you see that over here, swept the 1 hour high. We get the Spitfire entry model, we get the 5 minute breaker block form. So there's a bearish candle, bullish candles above, sweep liquidity, close below. That is now a breaker block. Okay, so this was where I was shorting. All right, we also, for bonus, had a local S&T, and we had a naked 4 hour gap below. Okay, so once we'd shown that we'd swept the 1 hour highs, we formed the Spitfire entry model. We were looking for our target, which was the previous 4 hour low. Okay, this is where I took TP1, and right down here is where I took TP2. Okay, and you can see how nice that rejection is there on 6 a.m. and 3 as well. Nice price action markers there for you. And yeah, that did actually form a 15 minute unicorn, which I've kept on the chart. So I'll go find that now because I haven't actually fully completed that. Let me get it. There it is, yeah. So we'll just add that in now, may as well. Yeah, and then we had that crazy pump, obviously, and this is pretty badass. This is one Kai mentioned. So you can see here's a bullish candle. Bearish candle sweeps liquidity. It then fails. It creates this huge internal liquidity, and this is what's called a unicorn. So once that comes down, bang, there you go. So all a unicorn is it's a breaker block that's aligned with a bullish gap or a bearish gap if it's a bearish one. Okay, and yeah, look at that little 2.5 bounce, very nice. And that's it really. So let's check questions. Any questions? Did that all make sense? I'll just add that in now, why not? Happy days. Okay, natural progression from what we're doing already. Exactly. Really happy with that. Alright guys, if there's no questions, that's me done. and have a great day, and I'll catch you soon.